Good morning, everyone, and welcome to the European crossover webinar. And we've seen the euro continue to push a little bit higher here. Dollar ease back. One of the things that we had talked about yesterday, or I posted a few times yesterday in the chat room, was this 2-hour chart here on the dollar index. And you can see once again why it's always so important for me to go with the touches as far as the body closes. And we were just simply not able to close above this 98.05, and this allowed this market to pull back and pull back. It has. We'll see how much further we can pull back. Now, we had a resistance in the euro at 11.94, and I think we made it right there to 95, so may have taken that out by a pip, but we can still push it a little bit higher, especially we know that we have the end of the month dollar selling, and that has finally matriculated. So we'll see if we can, if they're able to spook the dollar a little bit further. One of the things that we've been talking about the dollar index is that, hey, it has the most bulls since, from the commitment of traders since 2016. And the story that we had this morning shows the euro has the most bearish short or most short positions since 2016. Lots of times when you get something like that, you have the opportunity to exaggerate a move. And we could maybe see that, and I think that's what we'll kind of look into. If maybe we see something that sparks something. Like I said, we had our resistance at 11.94. The high has been 11.95.5, so not bad, off by a pip and a half. But because as I said, when we do our bias chart support, repeat that multiple times, these levels that we have, they're scalp levels. You can use that even if you're not a scalper, use that to fine tune maybe your entry system, or maybe confirm or not confirm, but they're good for that session into the next session. So basically it's good for 24 hours. And obviously we had our bias chart about, exactly 24 hours ago today. But anyway, as I said, we've made up here. Maybe we may be able to spook this dollar just a little bit lower, and then it might turn around and rebound, but we shall go on and see. Okay, we'll continue to work a little bit higher here. Swissy's gone dip back. We have not gone past, once again, there's my touches again on the body. We have now gone past 223. That's what we would need in order for this to launch up higher. So any moves up there has not been able to get past 223 on a 2-hour close. Same thing with the cash dollar index. I had it right here. A 2-hour close, kept saying, hey, it's got to close above 98.05 on a 2-hour close. Made a couple of stabs here, but weren't able to do that, and that's opened the door for this to move lower. And we'll see how much further that maybe the euro can push up higher. During the Asian session, I don't know if you're here, all of a sudden, out of nowhere, dollar CAD jumped up just a little over 22 pips, and then now we're trying to, little by little, giving that back up. Peso worked a little bit higher here. Dollar yen has now started to weaken. See, now we're all the way down to 11.33. We had our bias chart support at 11.19 here. We still have a little ways to go. Let's go and take a look at the news now. Oh, also, let's take a look on the economic calendar. They did this, and now I got to figure out how to remove these countries that I don't even want. I couldn't give a rat's what the heck it's going on, the interest rates in Angola, but I got to get these removed. So I just see the countries I want to see. Give me a break. I could care less about Portugal. Haha. But anyway, moving on, we just had the German data come in on CPI right here on the Baden-Württemberg state CPI, and then a little bit later on at 4, not 4 my time, but not your time, a little bit later on, we'll have at the top of the hour coming up is going to be Eurozone GDP flash. So we do have some important data will be coming out. And then at 7 a.m., we do get, well, that's 7 a.m. my time, 8 a.m. Eastern CPI for German CPI, and then we do have employment wages at the U.S. For here in the U.S. at 8:30, GDP, Canadian GDP, so that's going to be a mover right here, and producer prices, Canadian, and we do have Chicago Shy PMI at 9:45 Eastern, and consumer confidence at 10 a.m. Eastern, as well as pending home sales. So let's go and take a look here with the news. The morning bid, positive noises heard around Brexit. Oh my God, I don't want to read all that stuff. An unaccustomed whiff of optimism is emanating from the cross-party talks between Britain's ruling Conservatives and opposition Labour Party on Brexit. It's still not clear whether on substance, so they are near to a compromise, but local media agree the tone has improved, and now the two sides are, in the words of one Labour official, discussing the nuts and bolts of an agreement. Separately, Labour's policymaking council will decide today on a draft manifesto for next month's European Parliament elections on the assumption that the UK goes ahead and holds them. Pro-EU voices in the party wanted to guarantee a second referendum on Brexit in an eventuality. Others seek a compromise in which would merely demand one in the event of a Tory Brexit, i.e. in the one that Labour disagrees with. Those in favor of the compromise do so in the belief that a fudge is the best way to maintain the spotlight on divisions with the Conservative Party over Brexit. Their hope is that Theresa May will soon be replaced, oh my God, by a hard Brexit backer such as Boris Johnson, who would then call and lose a snaps election, so ushering Jeremy Corbyn into 10 Downing Street. Lots of hypotheticals in that one. In a data-heavy day in the Eurozone, with French GDP numbers showing that household spending in the first quarter recovered somewhat after being frightened by the yellow vest protests at the end of the last year, business investments and exports are less buoyant, however, meaning that the overall growth remained at 0.3. German inflation and unemployment data for April are due later. Well, we just showed those. Now, that was the Baden-Württemberg, but the German CPI comes out 8 a.m. Eastern. The European Court of Justice is due to rule this morning whether controversial provisions on the investor protection contained within an EU-Canada free trade deal are in line with EU law. Okay, so it could maybe have something between Euro-CAD. And going on to markets, disappointment from April Chinese surveys from Google parent Alphabet's Q1 results put a break on the upstart beat to the week up for world markets, even though the S&P clocked up a record intraday high and closed late on Monday. Alphabet's stock dropped more than 7% after the bell as its revenue growth fell to a 3-year low. The miss was a rare black mark in an otherwise decent U.S. earnings session so far, and eyes now turn to Apple's update after the close tonight. S&P futures are marginally in the red, the first thing. Chinese business surveys, meantime, continue to show growth this month, but miss forecasts and ask questions about the strength of the first quarter's economic recovery there. A cat and mouse game in local markets over whether incoming economic readings being more than less additional policy stimulus means Shanghai stocks ticked higher despite the downbeat factory readings. Hong Kong and Seoul equity market benchmarks dropped 0.6% each, however, and Chinese offshore weakened. Traders have one eye on the latest round of U.S.-China trade talks, which, oh my God, I'm so sick of hearing about that thing. And U.S. Treasury Secretary Mnuchin arrived in Beijing earlier, and he hoped further progress would be made in the negotiations over the coming days. You know, it was a month and a half ago, they were saying it was just weeks ahead. 2 days ago, Mnuchin said the same thing. It's weeks ahead. In Europe, it's a heavy day of economic releases and earning reports before the May 1st holidays across the continent on Wednesday, with the full Eurozone Q1 GDP number out later. France reported steadily on 3% tense expansion for the first 3 months, though separately recorded on an unexpected drop in consumer spending for March. On the corporate front, Standard Chartered Bank was up 5% after announcing its first share buyback in 20 years, with Apple results awaited later. And you can see here the data we had on the calendar. Eurozone, French, Italian, Spanish, 1 GDP, April inflation, German April jobless inflation. We saw that already. Bank of England chief Ramsden speaks in London. Okay, and let's go move on to FX, which you can see is very small story. The Japanese yen rallied to a three-week high on Tuesday as disappointing data on Chinese manufacturing undermined the risk appetite, with investors awaiting for European data to see if that will push currencies out of recent ranges. Forecasts are for 0.3% rise in Eurozone gross domestic product from the quarter before. That would be a bigger increase than the previous quarter and may take a sign of stabilization. Even such marginal growth, which could squeeze speculators who've been amassing large short positions in the euro with a net worth of 14.8 billion this week to April 23rd. Any signs of consolidation in the German CPI data and the Eurozone GDP figures, which come at the top of the hour, may lead to some unwinding of the extended short positions in the euro, particularly on the crosses, says Valentin Marinov, head of G10 FX in Credit Agricole. But early trends in the currency markets were cautious after Chinese official purchasing managers index dropped to 50.1. Forecasts have been no change from March's 50.5. Some of the favored currencies in low volatility environments, such as the Australian dollar and the Aussie and Swiss franc, fell 2 to 3%. 0.2 to 0.3%, I should say. And let's see. Trading was thin with Japan on holiday and to get thinner on Wednesday when China and much of the Europe will be off. So that's one thing you need to take into consideration. We probably see, if we're going to see something today, if we're going to see something, it's going to be today. Okay, because we got the May Day holidays. So as I said, trading was thin with Japan on holiday and set to get thinner on Wednesday when China and much of Europe will be off. So something's going to happen. It's going to happen today, folks. Against the basket of currencies, the dollar index was flat at 97.83. On a monthly basis, it was up 0.6% and on track for a third consecutive month of gains. Federal Reserve's two-day policy, which ends on Wednesday, remains a hurdle for the dollar. I'm not so much sure this could be that big of a thing, to be quite honest with you. So there are some key things, as I said. We've been talking about the dollar index, which has had the biggest, from commitment traders, the most long since 2016. Now we have the most euro short since 2014, and we can push a little bit higher in here, and we'll see how far we can take that. So let's go on and move ahead. Okay, so we've made it to 23%. How much further could we squeeze a little bit higher? If we would get the short, we could get a little bit of short cover in here. Remember, the dollar's already had a pretty good run. I think that the dollar's still, capable of moving higher, but could we get a pretty, like a little sneak attack here where they really not undo, but spook out some late shorts in the euro? That may take us up as high as 1228. It's right here at 1229. You see that? Now let's take a look at this on a 2-hour. taking this further back takes us all the way to 1239, which would be the 38%. If we go, all the way back to 1450, which is a more significant one here. We had a little bit of a dip here, which isn't too much. This is more significant because, and lots of times I'll put them together to see if I can get a confluence. But hang on. It's 1240, and then we have right here 1229. Let's see, go right there. So let's move this up here. $12.37. If we get a punch up in here, if we were to get some decent little short covering, you could take it just as high as right here to 1261 if we got a little bit of nutty. And that would be another good area here. So if you were to take on the market, 1237 and 1260. If we saw that, we saw some strong short covering. Let's go back to the daily. Key daily close would be 12. Really just about right there, 12.15 on a daily. That would be the 38%. I don't know if we're going to squeeze that far. If we were to pop up that far, because I think we could. Anyone that's short is going to just feel the pain, and they're going to say, "Well, I should have covered. I shouldn't have been short from down here." And one of the things, like I said, that we looked at and spent a little bit extra time in here is remember on Friday we had. I even put that. It was saying in the chat room, knock it out of the park. I think the Minister Trump was saying the same thing later on. Joked about him stealing my line, but I said I knocked it out of the park GDP. Now, whether or not you want to agree how strong it was or whatever, it certainly beat the expectations pretty big, and we couldn't even take out the 111 area. Now, I still think there's a potential that we move here, but once again, the market's so oversold. So once again, gains beget more gains. You see what I'm saying? And the higher it goes, people are going to say, "Oh my goodness, we should have never shorted there," or "Wow, that was a great buying opportunity." So how far could this thing make a run for? Well, this is pretty key right here. So it's going to be 1228, although the 38% is 1239. So the key there is going to be 1228 and 1256. 1228 and 1256. So I want to mark them both because if we were to get some short covering, don't forget we got ahead of May Day holidays. You may just see, some a little bit of unwinding come around. So let's go 12, 28, 56. I don't think it's going to take too much good data for them to push a little bit higher. And I just think that it might just, once again, gains beget more gains. Support, I think is going to be pretty tight. We'll go right there at 1162. Well, we can see where the resistance. This was the old resistance. There's a big pivot we've talked about. And the way this market's open to go lower, but obviously if the dollar wants to pare back a bit, and we did have some good news, if you want to look at it that way, about things could maybe get resolved and blah 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 with this Brexit business. We're gonna go. You'd see 29.80, but the last time we had our resistance was right there. 29.95, I think we'd have to give it some room if we are going to see the dollar pair back. And so if that would be the case, 30.34. And let's look at a 30.63. Yeah, there you go. We're pushing a little bit hard. Look at this dollar index. And that's the thing is that, will we be able to slide? And I think we could spook the market intraday. Okay, so it's going to be 30.34. Let's take a look at this on a 2-hour. Let's just go with 30.34. Support's going to be right there, 29.35. 29.35 for support. And moving into the Aussie dollar. See how far we can stretch in here if we do. We came off pretty good here on that China news, which I consider somewhat disappointing. You know what? If we were to take this out, I don't think we're going to take it out by much. It'd be we'll go there, 70.91. If things got a little bit overboard with the dollar, we'll go with 70.91. If everybody starts thinking, oh no, the dollar went too far. Remember, like I said, May Day holiday, so if we're going to see some moves, things going to get cooking, it's going to get cooking today. Support right there, 70.31. And 70.32 we had right there. 31.9, so it's 32. Let's take a look at the Kiwi. Right there, 67.23. And what we're trying to do here is just, it may not even get near these levels, but we want to be prepared. Like I said, you want to get caught with your pants down. So at least we have some levels that we're looking at as to where the market may end up going. So hang on. Suppose it's going to be right there, 66.50, not that far away, 66.50. Well, we moved up a little bit here, not a whole lot. We had 74.51, and we got up as high as what, 59? Maybe we ticked off 60. We'll keep that 74.51 on the downside. We surely aren't moving a whole lot at this point. It's going to come right in here. 73.98. Well, we had 73.84. But the Kiwi's under a lot of pressure. Let's go with 73.89 for support. Moving to the dollar CAD. We have given up pretty much most of all these gains. You see this right in here. We took off, and then look at that. We've turned around just giving up everything now. Well, we had a support from our Asian analysis. That is, I think it was 23 and then 34 even. It'd be 34.08 on the stretch. 34.08 in the stretch. If we see the dollar come off, let's go 21 and 08, 34.21 and 08. Upside is right there, 34.74. Let's go into the peso. This thing really stretched some legs. Look at that. That thing really stretched some legs here. On that risk aversion, that Chinese data, right here would be resistance there, and it almost made it there. It's 19.087. It almost got there. For right now, we'll put it right there at 1907 for right now. But risk aversion, if we were to see that, could really flip things around. This could get a little bit volatile here. So let's go right here with this one here, which would be 19.085, 19.085. This was a hard one because we're just all over the map on this thing. And quite often these runs don't last for very long. So this one is one that you might want to stay away from with all the volatility that's going on with this one. There you go. And support right here at 1898. And it's just all over the place. 1898. With the dollar yen, no changes. We had 11.19 here. At least no changes on the downside. We had 11.93 and we got up as high as what? 11.89. Yeah, 11.90. Resistance is right there. 11.64. Now the dollar index, you can see here, 97.78. We got there before, and 97.64. Well, we've just about tabbed it right. Well, we did actually got to 64 to the tick. But here's the deal. As I mentioned, we've been talking about this. That's helped spur the move up to these high levels. The most dollar bulls holding dollar longs since 2016. Now today, the most euro shorts since 2016. We got a lot of data today. May Day holidays tomorrow. The thought was, and we're talking about the month end selling. We're here at the month end. Hey, look, market's overstretched. And the key thing that I'm looking at to me is, look, that GDP was a knock it out of the park number. We should have taken out 111 on the stops on euro, and I don't even know why we didn't do that. So the door's open for them to stretch a little bit here. So the same thing here in the dollar. Could we get spooked? Here's 42 here. Let's take a look on the 2 hour. And that's what we're looking at. Where could this market go? And we don't want to get caught with our pants down, so that we're thinking, boy, how the heck did it get down there? And then afterwards, people say, well, that was a healthy correction. Now we can really start to move higher in the dollar. So 97.34 is a 38%. And looks pretty good there too across the board with little nice little touches. So let's go with 97.34. Look, we know the dollar's a buy. Okay, it's just a matter, all we're looking at is in a scenario where the dollar pulls back, once again, really overextended, the euro's been overextended, the euro didn't follow through on those great US GDP numbers, most euro shorts since 2016, coupled now with it, which has already been the most euro dollar bulls, and we're going on May Day holidays tomorrow. China will be closed. Hey, look, it's set up for whether, basically this is it. I'll give you the analogy. It's basically like, I don't want to go this far, but in a sense, you put the gasoline can in the shack. Okay, you have some matches close by. Doesn't mean the shack's going to catch on fire, but it certainly has the opportunity if someone comes by and flicks one of those matches that it could go up. Now, like I said, the shack going up might be a little bit of an extreme, but I'm saying is, the point being is that, hey, the ingredients are there for a decent little pullback in the dollar. Not anything massive, just something towards 34 would be nice. So right there, and that'd be the 38%. On the upside, resistance, well, we talked about this. I mentioned this multiple times and posted this chart multiple times in the chat room within just about an hour and a half span or 2 hour span, which is this 98.05, because I was looking at this first bar and it didn't do it. Then the next bar was still trying to do it and it couldn't do it, which is right here, these body touches. So that would, I'm not going to go that far because that would actually lead for us to break out higher. So the resistance now would come in at right there, 97.92. I think they're making too big of a thing about this FOMC. I really don't see anything coming out of that, but we'll see. I think they're wondering whether they would hint at rate cuts or what. I just don't see anything happening. I just think it's going to be more of a neutral type thing, but we shall see. Let's go and move into the cash dollar index. Look at this now. Now we're 1205. Look at that. Now we did reach it to the support here. It's 12.97.64. So maybe we'll see this ease back a bit. But that's what I'm saying is if the door's open, like I said, the gasoline can is inside the shack. We got the matches there. All we need is for someone to walk on by and light the thing, and then we're off on our way. Let's see. And gold. If the dollar pulls back, that would open the door for gold a little bit here. So hold on. Gold's pretty well beat up, but the dollar pullback would send this thing popping up. Let's go right there. See here? 1296. Support 1279. Let's go and move into the crosses. Trying to pull up my bias chart. Hang on. Doggone. Can't get it up. There you go. Well, we had 86.20. I don't see any reason to change here. On the upside, 86.50, 49. So no changes in the euro pound. Let's go move on to the euro yen. This is one that I was posting charts right when we were hitting that low, and there was our bias chart support, and it held to the pip yesterday. Look at that. And then we turn around zoom here. Actually made it all the way up nearly to the 38%. We're starting to take off here. If it gets a little bit carried away with itself, go right there. Give it some room. 25.45. Right there. Support is going to remain the same, 63. We did break eventually a little bit lower now, just recently, but go right there. Euro odd. I don't want to go overboard, but let's just give a little bit of room here. 59.37. Once again, as the euro gets popping a little bit. Whether it does or doesn't, let's say today's theme of the buys chart is in case we do see that dollar pullback and also a euro pop. If it doesn't happen, okay, great. But we certainly have the ingredients there. Also with the holiday, where we could go in and see that happen. So we want to be prepared. 58.51 is support. We're right here at the 38%. Take the middle right there. If we get popping, let's go right there and take the middle right there. 68.17. I don't know why that doesn't allow me to do that sometimes. Support, going right back to this 23%, which is 67.57. ASEAN, supposed to be right there. $78.30. We'll go with 79.03. which we had already before, and then sterling yen. Support's going to come in right there. 44.10. Might even have to push that up a little bit higher. Well, caught 44.18. Resistance will be right there at 44.88. It's not too much higher. They could maybe push by high, but we'll go with 44.88. This certainly has the opportunity to move a little bit higher here. Coming in right there at 84. It's really 56. Right there, we'll go with that. It's already had a pretty good little run here. $84.60. Support's right there at 83.45. And lastly, CAD yen. Oh, we held here this 61%. And we'll keep that until they break it. We'll 82.62. With resistance. Not expecting a whole lot. Just go back to this level, which is 83.05. 83.05. Okay, there's a bias chart, and as I mentioned, we know, possibly we could hit a little trough here in the dollar intraday, so we just want to be prepared for that in case we do see that. Here's the bias chart. I'll get that posted in the room, and thanks for joining us here on the European crossover.